Alright guys, welcome to the iSoup Free Mentorship Episode 1. This episode I will be talking about what the mentorship will conclude, as well as the candlesticks history, candlesticks Bible, and some candlesticks patterns. Alright, let's begin. So who am I? Some of you might know me from Twitter for my precise entries. Some of you might know me personally. Anyways, I'm 20 years old, soon to be 21. I'm a profitable trader, and I'm going out of my time to teach people for free because I like teaching people. I'm going to be frank, I just do. And I believe I can bring great value to anyone, beginner or advanced, anyone. What will I teach? So I will teach ICD concepts, and I will make sure I cut out all the noise and dumb down the concepts for anyone to understand and use in the markets in real time. My goal is to make sure everyone after this mentorship is profitable or has a profitable model working for them. Who is this course for? I believe this course for is anyone. Now, you can call this a course or a mentorship. It does not matter to me. It's free. It's on YouTube. I believe anyone can learn from this. It's always good to go back on the basics if you are an advanced trader. But yeah. So will I teach Turtle Soup? Yes, I eventually later in the course or mentorship will be delving into teaching Turtle Soup for those that are beginning and have never heard the term Turtle Soup. It's okay. This will make a lot more sense down the road. Am I profitable? Yes, I'm absolutely profitable, and I'll be showcasing it for trade recaps and so on. I believe anyone can be profitable with the right amount of work ethic and knowledge and experience within the markets. When you're beginning to learn trading, it can be difficult in the beginning and demoralizing, but that's how it is when you're learning a new skill. As soon as you get the grasp of the basics and the fundamentals, you will see your hard work finally paying off. But yes, by the end of this mentorship, I believe you guys will have a profitable model as well. So why should I trust you? I don't think you should trust me. You don't have no reason to. But what I will be teaching you and the concepts I will be teaching you, I want you to go into the charts afterwards and look for it and see if it does work. And that's the way you're going to see if I'm telling the truth to you or not. Because I could be lying. But I want you, after my teachings, to go into the charts and have a look for yourself. Because for me and everyone else that I've taught and privately mentored before, because there's many that I have privately mentored and are doing great now, it's undeniable that this works and what I'll be teaching works. But yeah, it's just a matter of time until we delve into it. But yeah, let's begin. So the Candlestick Bible, this is a book, and I believe anyone that's beginning trading should find a PDF online or buy this book. I believe there's a cheap copy on Amazon. It's a great book. I read it when I was beginning trading. It helped me out a lot. It can provide good value and understanding of the anatomy of a candlestick and what goes behind the formation of a candlestick as well. It's widely famous because of I'm not sure how to pronounce his name, but I'm just going to leave it at that. Yes, so he was a very successful trader because he was using candlesticks to basically predict price and what price will do next. Amazing story. I recommend everyone to look into the story and read more about it. It's very motivational. Anyways, let's continue forward. So the anatomy of a candlestick. Every candle has a opening and a close. Okay? So when a candle genuinely, like when it opens for a green candle, this would be a bullish candle. This is what we would be calling a bullish candle right here, the green candle, because it's green, obviously, but it closes up here and ends. So every candle has a beginning and an end, which means they have durations. And there's different type of durations. There's candlesticks that take 1 day, an hour, 4 hours, 15 minutes, 1 week, 1 month. There's candles that take long durations for them to finally form and close, for a new candlestick to open and begin. So for a bullish candle, right, we would have the opening here. This would be the opening, and then the close would be up here. Now, that means that whenever this candle opened and the duration begun, it started from here and then it closed here. Now, you might be wondering, if you're a beginner, what is this here? This is a candlestick wick. So it's a wick of the candlestick. What this is basically is where the price previously was during the duration of the candle. So when the candle began here, it went lower and then went higher again. So it's like it's leaving a trail of previous price which the candlestick went to. So yeah, these are a few candlestick patterns that I have on the screen. I don't believe you guys should be remembering the names, but they're good to be there. I personally have the names remembered. That's just because I read the Candlestick Bible and I have most of the book memorized. If I was to be asked which one is my favorite, it won't make sense right now, but I would say it's this one here. We would talk about this pattern quite a lot, and I'll also talk about how it can be used with a particular model. So yeah, why do we use candlesticks, and why is this candlestick pattern important, or why is it important to understand the candlesticks patterns? It's because it can provide great value and we can understand what the market was doing in that particular minute or hour. So if we're looking at a candlestick that has already formed, then we're looking in the past and what price did in the past. Let's say this is a 1 hour candlestick. That means that it took us an entire hour for this candlestick right here to form. And by looking at the formation at the end of the candle, we can see what price did during that particular hour. So price basically began from here, and then it went lower, and then it went higher, and then came back down and closed right here. And this is how much value candlesticks can provide. Some traders believe that reading candlesticks can provide great technical edge. I personally don't believe that. Would delve into it. I believe candlesticks are useful, but they don't move the markets. And yeah, I'll delve way more into that. It will make way more sense. I just don't want to confuse everyone that's beginning right now. But yeah, by knowing candlesticks and how they form, we can see and understand which way the market is trending. Is it trending up or trending down? Is a reversal going to happen or not? All right, so let's move on to the next page. So when some of you begin trading, you might see these patterns online, and you might see some people talking about these patterns right here. Now, the question arises, do these patterns work? And should you use these patterns? I personally believe that these patterns don't work. I believe they're made for people that are beginning and putting their money in to lose their money, which goes into another topic. I don't believe anyone should be using these at all. I don't think they're a good practice. The reason they're made is they basically get dumb money to enter the markets using these chart patterns. And then once the chart patterns are used, smart money, and I will talk about who smart money is, they pretty much go the complete opposite way of these chart patterns right here. So let's say we were to follow this one right here. And as soon as it broke above this neckline right here, my entry would be right here and my stop loss will be right here. I will talk about what stop loss is, don't worry. And then let's say I take my entry here and then it goes higher a little bit. What smart money does is they pretty much, in that point, reverse the market and go completely the opposite way. And in this mentorship, we're going to be talking about how to utilize smart money's tools and replicate their way of trading. I believe by the end of this mentorship, there will be undeniable evidence for every single one that is watching this mentorship, because I believe everyone will see that there's clearly some patterns outside of these patterns right here. I'm talking about different kinds of patterns. They're undeniable, that they repeat nearly every single day and that they work. So, who is smart money? Smart money is a group of experienced market participants who are working for major institutions who often take the opposite side of the trades from less informed traders, which is dumb money in another way. They're highly skilled and they're not known. They're not well known. Unlike famous traders like George Soros, smart money is crucial in the market as they provide liquidity, which I will talk about because I know it doesn't make sense right now, and exploit the positions of dumb money. So the whole point of smart money is to liquidate or to take the cash of dumb money. And who's dumb money? Well, it's pretty much all of us. The 99% of traders are dumb money. And smart money are basically the ones in the back who know everything that's going on and know where price is going to be. All right, I think that concludes the first lecture. And in the next lecture, I will be talking about leverage, brokers, trends, and premium and discount. If you guys have any questions, be sure to ask them in the comments. We will answer the questions and get back to you. Thank you. Have a good day.